let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
It's been an exciting time. I say this every time because markets stay exciting, but here we are on Wednesday, July 2nd, heading into July 4th weekend. Bitcoin knocking on the door yet again of all-time highs at like 109.5 as we talk. Stocks at all-time highs, effectively. I mean, made new all-time highs again. What maybe start with the macro and the stocks. I know Trump also likes a Vietnam deal and some other stuff. Like, what is the market broadly? It doesn't seem like it was sell in May and go away. Here we are at the beginning of July, and stocks and markets are up.
Yeah, no, I mean, it's a combination of a couple of different things. The monetary backdrop is really strong and supportive. That's been a function of weakening data and more a function of pressure being applied on Powell to cut rates, and so there's some pretty strong actions that the government can take to get rates lower, and that essentially means like appointing a shadow Fed chair to a new governor's seat, and just constantly deriding Powell in public. So that will probably lead to us cutting rates sooner rather than later. And in terms of current pricing, you have about 65 bips out to December and like three full cuts by January. So in essentially 7 months, folks are expecting, the rate market to have come down by 75 basis points, and that's material. And then the other main driver of markets is the fiscal impulse in markets. We just passed the Senate's version of the big beautiful bill that is going to add, anywhere from $3 to $4 trillion to the debt over the coming years. But by and large, it's a ton of spending. Uh, by historical context, it's like emergency levels of spending, and yet the economy's doing just fine. So throw in an easy monetary policy with a very strong fiscal backdrop, and you get higher risk markets, and that's what you're seeing here in equities. To add to that, there's still strong momentum behind the AI narrative. So names that are going to benefit from AI becoming a much more dominant part of how folks operate on a day-to-day basis, robotics, analyze data, all of that stuff, those companies are continuing to perform well. Um, so yeah, and the trade stuff, folks seem to have put less weight on the potential consequences of tariff policy, and so folks are willing to look through a lot more on the trade stuff just because it feels like yesterday's news, and like people are like, oh, we're gonna have tariffs and we'll kind of figure it out. So yeah, trade policy easy, strong fiscal, easy monetary, risk markets higher. But there are some pockets that are worth watching because again, you can't just spend like trillions of dollars and have no consequence to it. And so we've seen a reasonable like the yield curve is pretty steep right now, and it looks like it's probably going to go steeper. Uh, FX wise, euro this week touched 118, broke above briefly. So you've seen a roughly 14-15% depreciation in the dollar versus the euro. And so that kind of seems like where the release valve is for markets at the moment. Um, and I don't see that trend stopping. Like we are very adversarial on trade policy. Military policy, I think that's up for debate. And then on top of that, we're just printing a ton of money. And so, the natural kind of response function to that in the marketplace is that, the value of dollars on a relative basis needs to decline. And that is what you're seeing happening in global FX markets.
Yep. So let's talk about the flows on the Bitcoin side, because obviously Bitcoin getting a bit of a bounce, or at least supported by a supportive risk environment, but also huge flows. I saw CoinDesk reported that the public Bitcoin companies have taken in much more in capital than the net inflows of the Bitcoin ETFs in Q2. Is that what you're seeing? And is the rise in Bitcoin we're seeing at the moment, is it these publicly traded treasury companies in the market?
Yeah. So, in terms of the flow analysis we've done, there's been about $20-ish billion worth of buying between these publicly listed, treasury vehicles and the ETFs. And I think the ETFs account for, like $1.5 billion of Bitcoin inflows. But the story is pretty clear. You're talking about, net buying in the ballpark of $20 billion,
Year to date.
from year to date, from known vehicles, and you're talking about, Bitcoin supply that's, call it 50-ish million dollars, per day, in sell pressure. I think it's probably a little bit less because, some of these miners keep their BTC balances. But, when you break down that 20 billion number, you're talking about like an imbalance, that's around like 70 million bucks of net buying pressure per day, which is a lot for any market to absorb. But ultimately, over time, if these trends persist, that does mean that Bitcoin will be at, all-time highs much sooner rather than later. And especially with this, supportive risk backdrop, the debasement, fiscal narrative, staying strong and getting stronger by the day, in fact. I think that's going to bode well for crypto. And then, away from the flows, you're seeing a regulatory landscape that is unprecedented, for crypto. The approval process for ETFs, getting faster, tokenization of equities, increased issuance of stablecoins, right? And so we're finally starting to see the wheels of government actually, supporting crypto, and over time, I think that should help crypto price appreciation XBTC, simply because, it's a narrative that, a lot of folks can latch onto pretty easily. Now, there's still some doubt over the value accrual, that happens in, kind of non-Bitcoin area. But by and large, when you have all these constructive, developments, it should really kind of keep the narrative, alive and well. And as long as there's a healthy backdrop, I think that could lead to, price appreciation.
There you have it. Our friend Beimnet Abebe from Galaxy Trading. Thank you so much.
Thanks for having me.